if you're tuning in, you are listening to one of the very first podcasts that we are doing. It's the extension of The Real Money Show, and this is the version posted up on our website. And if you're already there at the website, you know the website is guildhallwealth.com. And if you're a listener to The Real Money Show, or if you're just tuning in to hear what we have to say, today's topic on this quick podcast is going to be the difference between paper and physical gold. Jeremy, most of the people that we deal with on a regular basis that like gold and silver have at some point in time also enjoyed or owned a stock that produces gold or silver. And there is a very big divide between what people come to our office understanding or knowing or have already been educating themselves about and what the actual reality is of the truth in the market behind holding paper versus gold. Let's keep this focused. Let's start with certificates. Our listeners have probably at some point in time gone into a bank or heard of or thought of buying or owning a paper certificate. What it is a promissory note from the bank for X amount of ounces bought at that particular institution, and they are claiming it's your right to that amount of bullion. Yay or nay, yes or no, what are the goods and bads about the certificates?
Right. So first, you walk into the bank, you say, I want to buy gold. They say, great, let's buy a certificate. They don't go straight to the physical product. Here you are. Here's your options, which is what we do at Guildhall. You walk in, here are the different bars. Here's the different combinations that you can get. Instead, it's, hey, let's buy a certificate. Well, what is it? It's a promissory note, as you said. And you also mentioned, Darren, that it's strictly for that institution.
Non-transferable.
It's non-transferable. You can't take that and sell it to a bullion dealer. You can't take that to Dubai and China or England or wherever you want to go. You can't take it and sell it globally. That makes it's no longer a universal universal
exchange.
Money or currency
Medium of exchange,
or
right?
asset. It's specific to the bank. So I think that's probably the biggest reason not to do it, because if you're going to own gold, you want to have something that's universal, that anyone would accept as exchange. Then there's all the hidden fees. You know, you're still paying an exchange, but
some
you're paying.
banks will charge storage.
They're going to some BS. Pay storage. Some when you decide to go take the delivery of that certificate, they say, meh, we'll give you the cash.
Fine print. You
so
got to read it.
You got to read a lot of fine print on the certificates. But I would say the takeaway there is non-transferable. Costs are hidden and can be pretty high once you do the math on it. And also the lack of liquidity. It's one certificate and one certificate only. So if you buy 500 ounces, you're not selling 500 ounces. That's right.
Right. And also, too, banking hours, folks. The markets do not sleep. They do not wait for you. If you are member of that institution and you're using that institution, you know when their doors close. We've seen millions of commercials on it. The other problem that I have with certificates, hypothecation, Jeremy, is there a guarantee that the product you bought is actually in the vaults of that bank, or are they hanging on some other promise? You know, many analysts have said that in the world of paper gold, for example, there's as much as 100 ounces on paper to every actual 1 ounce that exists. So what we say is always very simple. If you can't hold it, you don't own it.
That's right. And this is not just for the world of certificates. We're looking at ETFs as well, right? This would reach out to the world of ETFs and reach out to the world of futures contracts. The idea that if there's no serial numbers associated, then you don't know where the product is. And if you don't know where the product is, then the institution that is supposedly storing that product, the question becomes, what are they doing with the money, right? It's fungible product at that point. When you have serial numbers on an inventory report, that product is non-fungible. It cannot be used for anything else. It's yours. And so that is a big key difference too. And of course, you know, no one's audited an ETF before. We just take their word for it that that there's a number of ounces moving in and out of that fund, or
likewise,
out of that ETF all the time.
Likewise, if I was to go into a bank's statements, their annual statements, public statements, and see that their clients have, 100,000 ounces of gold in paper, in certificate form, do I get the chance as an investor in that bank to say, can I go see that gold and make sure it exists and that you have it in your vaults? Of course you don't. Folks, that's the thing that you have to understand, is that paper is not like physical at all. There are so many differences. Jeremy, another big one before we end today, paper moves with paper. So I'm in the market, I'm holding a good high quality stock that produces gold. I don't own gold. I own the company. Let's remember that, folks. I own the company. So if their accountant decides to embezzle a few $1,000,000, that company's going down, no matter how well the gold market is doing. But likewise, if the stock market blows apart tomorrow, what happens to this friggin' paper that I have, right? It drops in value as well. It doesn't move with gold.
Yeah, so one of the biggest advantages to, in this case, mining stocks is what we're talking about, is that they would provide quote unquote leverage. This idea that if the gold and silver market take off, the leverage that you get out of the mining stocks is going to be unreal, and so that would be a great exposure in your portfolio. Of course, you're going to have to pick the winner, right? You got to figure out which is the winner and which is going to be the loser. And as well, a lot of people will move towards the stock, or they'll move towards an ETF or a pool account, some sort of physical backed fund maybe. And all of these, the problem with all of these investments, the problem with not having it physically in your hand, or not having access to it being physically in your hand, is that you're truly not diversified. You can diversify into the exposure of the market. You can say, you know what, I've got my telecom stocks, I've got my financials, I've got my insurances and whatnot, but now I'm opening up to the mining sector. But all of the stocks are positively correlated. They're all valued in Canadian dollars in this example, right? What if the Canadian dollar is going down? We know it's going down. We see it in
Day to day.
in how the price of gold continues to rise in Canadian currency. So the idea of being properly diversified means owning a hard asset that is negatively correlated to stocks, negatively correlated to the currency, right? Notice I didn't say money, I said currency. Currencies can go up and down. Mostly they go down. And up short term, down long term, hands down, that is how it works. So we want you to be properly diversified. Now, we're not advisors, right? We're not giving advice, but we are telling you that to be properly diversified means having negatively correlated assets. And so the mining stocks aren't really going to provide that.
If you care about your wealth, folks, if you care about your future, if you care about your family, get your butts in here to Guildhall and take a look at the product. Put it in your hand and feel what it feels like to hold 6.5 pounds of silver in one hand. It's tremendous feeling, and you'll be happy that you did. We think that there's lots of value in these markets, and we're not the end-all that says all. Do your due diligence, know what you want before you get here, or use us and we'll point you in the right direction. Either way, get into Guildhall, go to the website. You're there now. You're listening to this podcast. We thank you for doing that. The number to call, 1-877-8-SILVER, and lots more to come in next week's show and the next podcast we do. Thank you for joining us today on the Real Money Show Extended Podcast. Take care.